G'day, Tony Davison from Pride joining you today. Hope this message finds you well. Well folks, just an update on some changes to your managed portfolio on Hub24 that we flagged with you late last year or very recently. I'm just going to refresh you on those changes today and give you a quick update on what you'll see as far as adjustments go in the coming weeks in your managed portfolio. Firstly, on the changes, just to refresh your memory, they're threefold. Firstly, the Australian equities component of your portfolio will now be wrapped up into what we call an SMA. The SMA, in summary, still has your account owning the underlying shares or ETFs in that Australian equities portfolio, but by wrapping it up, your portfolio can more easily participate in things we call corporate actions, which is where companies raise money or do other things to their capital structure. But in summary, that means that a more active approach can be taken than had historically been the case in those portfolios. The second change is on the international equities front. International equities are not only a very important part of the portfolio, they're really where a lot of the growth of the future in the portfolios is. And what we are doing there is starting to introduce some new products into the actual overall portfolio. The first new product we're going to be introducing is from a fund manager called Franklin Templeton, and a little bit later on this video you're going to see an interview that I did recently with their New York portfolio manager Don Huber, where he tells us some interesting things about that particular product and fund that we're going to be investing in, but importantly too gives us a few insights into his view on markets, which was quite fascinating to me. The third thing that's going to change on the portfolio is, in summary, the name will change to North Star. Now previously it was AZ Sestante. The change to North Star literally means nothing. It's a fresh coat of paint and an opportunity for us to change the name as part of these other adjustments that we're making to the portfolio. To be clear, the people involved in the investment committee, investment decision-making process, underlying products and overall approach absolutely does not change as a result of that name change. Now, just taking you through a couple of things very quickly. When you first log into Hub24, you will start to see a few changes coming through on your portfolio reporting system. I'll take you through that now. Once you log into Hub24, as you know, you hit the arrow and of course you can see the balance in your managed portfolio. Now that's not going to change at all. However, to see the underlying assets, you click on Account Reports and then pick on Valuation Reports and Detailed. Now, Valuation Detail will show you each and every asset in your portfolio, your holdings, their value, and how those holding values have changed over time. And as ever, you can still get a download of that particular report. Now, if you're not sure how to find this report or you're struggling to kind of find the detail there, don't hesitate to call. The important thing is that all of the same assets that are in your portfolio today are still there. Nothing has changed on that front, and indeed you'll still be able to see how each of those assets is performing as you can now inside Hub24. The second thing I talked about just briefly there is that the approach to international equities is going to be adjusting this year. International equities are such an important part of our overall portfolio, but with more than 1,800 stocks that could potentially fall into the portfolio from companies that are large enough to fit the screen for us around the world, it's important to be a little bit more discreet in terms of some of the things that are invested in. And with Franklin Templeton, we're now going to be introducing what they call their Global Growth Fund, which has a bias, of course, towards growth assets, but very importantly is extremely selective in the assets they take. A couple of days ago, I spoke with Don Huber, who's the portfolio manager for this particular fund in New York. Don and I had a chat about a few things, but some of them were very, very interesting, not just in terms of the composition of the portfolio, but importantly, what Don thinks about the markets ahead. So with that in mind, let's roll over to Don and hear what he had to say about the Franklin Templeton Growth Fund that's going to be very soon part of the North Star portfolio when you log in. Don, great to have your company this morning. Thank you very much for joining us.
Thank you, Tony. Glad to be here.
Don, when we look at the portfolio, two big sectors or concentrations, I suppose, are around technology. Consumer discretionary is another one as well. But that does sort of signal a bias towards growth attributes in those stocks that you're choosing?
Absolutely. We have a growth focus. We're growth investors, and we're looking for companies with, as I say, with sustainable growth over a number of years.
Yep. One of the stock's bigger positions in the portfolio is a company called Zebra Technologies. So to put into context, folks, Zebra Technologies has got sales in excess, Don, of about $4 billion, and the market cap's in excess of $14 billion, which in an Australian context makes it a pretty big business. But am I correct in understanding, in the universe of stocks that you look at, it's probably, middle of the road, one of the smaller companies?
Exactly. And it's the kind of business that we like. It's a very focused business. So it may compete against, larger companies, or in the past may have competed against larger companies where this business is a small component. But we like the business. We like the opportunity set for these devices, and are happy to invest in more of a pure play company that with just that focus in their business model, because we see tremendous growth ahead of it.
Are there stocks in the portfolio that have shown real resilience over the past year or so, and in fact might have done well in the environment we find ourselves in?
There absolutely are, and we've characterized it or thought about it as, we didn't come into 2020 expecting a global pandemic, but we did have a number of holdings that were in 2019, 2018 were strong growers and have gotten a boost to their growth in this period. So clearly, any companies that are e-commerce related, and for us that's included Mercado Libre, which is the leading e-commerce platform in Latin America, a company called Shopify, which is the one of the leading operating systems for small and medium-sized businesses to run their online business, and that's more complex than just putting a website up. Have gotten a tremendous boost, and I think we are clear-eyed in terms of when people can go back to stores, they will. But I think some of this growth that we've seen, some of the e-commerce customers that were added in 2020 will be sticky and will be retained going forward once we get back to normal.
Looking ahead, Don, there's a lot of talk out there about markets, exuberance over valuations, those sorts of things. What's your perception of what we should expect in terms of broad market returns over the next year or two?
Yeah, I think, broadly speaking, it comes from a backdrop that says that ultimately we get back to something of what life looked like in 2019.
Yep.
And that was pretty modest global economic growth. Inflation was not a major pressure, a major issue. In fact, the central bank here in the States was trying to generate more inflation.
Yeah, that's right.
So in that kind of an environment, I think we get back to markets that are more normal. I think you still have a lot of liquidity in the market supporting the equity markets. And so looking out a couple of years in that kind of environment, I think we get back to an environment that rewards companies with attractive fundamentals, attractive growth, high quality companies, strong secular growth drivers like e-commerce behind them. So fairly positive outlook looking out over the next couple of years.
That's really interesting, Don. So bottom line, despite the uncertainty out there, there's plenty of opportunities, and you and your team are seeking those opportunities, as you said, in those areas of secular growth or longer term opportunities for perhaps catch-up industries.
Yes. We continue to find new opportunities, continue to, at the same time, continue to be comfortable with the holdings that we have in the portfolio, because as I say, there are long-term secular drivers behind these companies, and while growth may have been slowed down, in some cases accelerated in others during the pandemic, we really haven't seen these secular drivers change looking out over a number of years.
Fantastic. Well, Don, thank you so much for your time for our audience this morning. It's greatly appreciated. So folks, that's Don Huber, who is a portfolio manager at Franklin Templeton. Look forward to seeing you again soon, Don.
Great. Thank you very much.